This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Brent crude futures fell 43 cents, or 0.57%, to $74.74 a barrel by 07:05 GMT, while U.S. West Texas Intermediate crude futures were at $70.73 a barrel, down 51 cents, or 0.73%.
China has issued an additional crude oil import quota of at least 5.84 million metric tons, 116,800 barrels per day, to independent refiners for cargoes arriving by end 2024 and in early 2025, people familiar with the situation said on Monday. The quotas are likely to lift China's crude imports heading into next year, after purchases rebounded in November, driven by sharp price cuts for shipments from Iraq and Saudi Arabia. Refiners, including Hengli Petrochemical and some independents in eastern Shandong province, also known as teapots, have been notified that they will receive additional quota volumes for 2024, they said.
Moving on to the top news in the energy sector.
Concerns that Europe is facing a natural gas supply crunch this winter are overblown, with the liquefied natural gas, LNG, market already stepping up to avoid any shortfall, albeit at higher prices. European natural gas prices climbed to the highest level in 2 years last week, with the benchmark front-month contract at the Dutch TTF hub reaching €49.03 per megawatt-hour on November 22, equivalent to $14.97 per million British thermal units, MMBTU. Prices have rallied about 40% since mid-September amid fears that the remaining Russian pipeline supplies to Europe will be halted or face further curtailment.
Russian gas exports to Europe through Ukraine have been stable on Monday despite a contractual row between Kremlin-owned Gazprom and Austria's OMV, which halted gas flows to the Vienna-based company this month. Russia stopped gas supplies to OMV in mid-November in a dispute over payments but was still pumping steady volumes to Europe via Ukraine after remaining buyers asked for more gas. Russian gas transit via neighboring Ukraine has been complicated by the war that erupted in February 2022. Next, we have the top news in metal markets. Iron ore futures strengthened on Monday, buoyed by stronger global steel production, although mounting trade tensions surrounding top consumer China capped gains. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.84% higher at 781 yuan and 50 fen, $107.88, a metric ton. The contract had earlier risen as high as 791 yuan, its strongest since November 8. The benchmark December iron ore on the Singapore Exchange was 1.61% higher at $102.20 a ton, as of 07:10 GMT.
The World Steel Association, WorldSteel, has made an upward revision to its data for October 2024 steel production after a change to South Korean data, it said on Monday. The revised figures show global crude steel production in October rose 1% from a year earlier to 152.1 million metric tons. On Friday, the group released data showing global crude steel output rose 0.4% to 151.2 million tons.
We will now look at the top news in the agricultural sector.
Thailand will give support of 38 billion baht, $1.1 billion, to rice farmers in an effort to boost productivity, its agriculture minister said on Monday. Farmers will receive 1,000 baht, $29, per rai for up to 10 rai, 1.6 hectares, Minister Naramon Pinosinwat told reporters, adding about 4.68 million households would benefit. The assistance plan would be proposed to Cabinet at a meeting scheduled for Friday, Naramon said. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.